Hi guys, good morning, how are you? Vladimir here. This is the video instead of the live room meeting for today. Couldn't start it on time due to some technical issues with the internet, with the router to be more specific. But now we are back, and here is the video with the update as promised. So what did we have so far? CPI and core CPI from the US. While the core CPI was, as per the prediction, the forecast 0.2, the CPI itself dropped to 0.1. That brings some doubts about the ability of the Fed to go for the hikes they plan on the coming period. It doesn't really change the game too much, but it brings the short-term doubts. As you know, CPI is one of these factors that the central bank is looking at to make the decision over the rates, right? Over the cash rates in the bank. So CPI is one of these. It's coming a bit disappointing. On the short term, it has the bearish impact, and we can see that basically affecting the major pairs that we have been looking at. So first, let's go to the Australian pairs, as they are the main ones, the Pacific pairs, the main leaders this week. We got the movement we were looking for. We got the bullish hidden divergence coming in play finally. Bullish hidden divergence must be confirmed by two things. One, no signs against us, and we don't have any signs against us on the daily. It's only bullish divergence, the last one we have. And the lower time frame does support the bullish divergence by itself, and that exactly what we have here, a bullish divergence on the 1 hour chart. So we mark the last trend line. This is basically our breakout point, and the Aussie dollar is back to the bullish momentum. For us, the plan was and remains bullish as long as we are above the invalidation. The careful sign would be for us if we go below the 61.8 straight and hold below that, but we can see here as it tried to break, immediately retracing up with the divergence. That means the bulls are here and they are fighting. So our bullish plan was and still remains on plan. Next one on the list we have for the updates is the Aussie versus the franc, which moves much better. Same story, we were bullish and we are still bullish as long as this invalidation holds. Bullish hidden divergence can in play between these two lows, and low here the MACD shows the confirmation. On the 4 hour chart we did have the signs against us with the bearish divergence here, which makes it to be aggressive, bit more aggressive. We do have these two waves correction, which is valid, and again, yes, it's a bit more aggressive than the Aussie dollar, for example, but our direction from the weekly and the monthly is bullish. So the 1 hour chart has to fit in the 4 hour chart, the bullish divergence, which it does. We got these two waves also, and we got after yesterday we got these two waves as in play as well. So the same story, trend line, and the divergence is there, of course, and that's all. We got a move now. The move up here gaining such momentum not because of the Australian, because of the franc mainly, but it goes and continues with the higher time frame from the weekly and the monthly expectations. So we were bullish, we remain bullish in our plan. According to, well, the weekly range and basically the triangle we have here, right? Our long-term target is to the top of all that. That's all for the Aussie franc. The next one on the list, pound Aussie, still fighting inside this range. This attempt to break lower, retraced all the way up again. Nothing clear at this stage. So from my point of view, yes, the pound Aussie was and remains bearish for the long term. We are after looking for sells. I don't see anything that is really worthy at this stage. So from my point of view, it's simply better not to be traded. Same said about the Euro Aussie, which refused, well, it was close enough to create a false break. However, it stops on a double top. There is a divergence. There is everything in play. And also we are stuck in the range. So due to the fact that we are bearish with the weekly cycle, that means we are looking to sell the rallies. We are looking to sell the tops. Top of the range is one of the cases. Two waves, fake breakouts, and of course convergences. But in that case, we don't have any convergence. So the whole trading with the Euro Aussie sells currently is more aggressive. The next one on the list is coming from the major. So the euro dollar, we are after buys as long as the daily invalidation holds. And as you remember, our plan was and remains buy dips. So every time we are below the 50%, we can start looking for the buy setups. And we are in this moment right now of this range. Our plan was and remains the same. As long as we are above the invalidation area, we expect the correction inside the range or a two waves correction before we go down again. So the euro is dropping right now to the places we wanted it to see. Start looking for the buy setups with the systems that you are trading with. And same with the pound dollar, which is finally completing the second leg. No, it's not sexy in terms of the two candles. However, as long as we are above this area, the pound dollar can easily make the two waves correction for us before we continue to the sell. So the second leg is forming. This becomes a beautiful area for possible bullish retraces to the upside. New Zealandian dollar also made a bullish hidden divergence for us. So the plan here is the same like with the Aussie. We don't have any signs against us on a daily. We have the divergence on the 1 hour chart here. The problem is that this is the trend line, right, that connects the divergence. So these are the lows of the divergence. This is the last high of the divergence in between the lows. Now, this is the trend line we mark, right? This has to be broken before we can discuss about buy setups. So we are on the watching list here, or this is another alternative. We got some false break here, turn around, higher highs, and then we have the validation to start looking for buy setups with the systems you use. Dollar yen, the rockstar, the bullish rockstar, which now reached the 61.8 we were talking about. Be careful here, don't go for sell for whatever happens. That's not smart. Sorry. The 4 hour chart does not have nothing now besides a bullish extreme divergence. And the 1 hour chart does not have any setup. We don't have a false break, we don't have lower lows, we don't have three waves down, so nothing here. That's why we have to be careful. The dollar yen can easily still try and create new highs. Something like that. No? Where is my pen? Something like that. Okay, so don't rush into that. No signs, no need to try and guess where the top is going to be. Let things form. And for all those of you who are in long position since this breakout that we had a couple of weeks ago, this is the exact place we wanted it to reach in order to cash out. So cashing out or full or at least partial is very smart at these levels with the daily cycle. Pound yen, we were and remain bullish in our view. Nothing changed. Daily chart, 4 hour chart. 1 hour chart combo has no divergences with false break and convergence. There was one false break on the top here, never managed to do the second one. There was no divergence since then, no false break since then, so basically it can also still keep doing highs to create that. No rush, no need to rush here. And Euro Yen, which got us one false break yesterday, and we were waiting for the second one, never managed to do that. And once again, this is a reminder why signs are so critical. When you're looking to go against, you want to confirm. This high was broken, the divergence was gone, no false break and convergence anymore, and the continuation goes on. Again, no signs for turnaround currently. The next level for the Euro Yen might be all the way towards the 132, 133 area, the one that we have been talking about here. That might turn to be the special cycle that it's building here. This is the next critical area where from we would be looking for ourselves. Meanwhile, there is nothing hinting for a sell yet, besides divergence. So yes, there is divergence. So what? There are no cycles in play, no levels in play, no false break and convergence as setups, no trendline breakouts, nothing. Divergence by itself could lead, in that case, for little pullbacks, like it did, right? And that's all. Don't fall in love with short-term divergences before they have the real signs and setups. Don't place yourself in that in that mistaken area. The Kiwi versus the Canadian. We wouldn't remain bearish here, which means we are looking to sell the rallies. The plan was and remains still the same. Same with the dollar CAD. Same with the Euro CAD, which currently is ugly very much from my point of view. And the CAD franc is one to pay attention to, because on the short term we were looking for possible new lows to be created. The pair never managed to make any breakout or any lows with a setup. And instead of that, it's breaking through the little range here, creating new momentum. So the short-term plan for possible sales, of course, that did not become relevant and is not relevant. That brings us back to the long term. And for the long term, we were and we remain bullish. This is where we are moving at, and our expectations for the long term remains bullish. So for this pair, we can summarize and say that as long as we are above the invalidation area, the long-term plan here is back to bullish. Well, it always was bullish, but basically the formation on the 4-hour chart suggested possibility for new low, never provide any opportunity. Therefore, the long-term here is the only one that remains in play. Gold gold mainly. As far as holding the invalidation area, we can look for the buy setups. Break below that can lead towards 12.20. Not much more to add about it. The 1-hour chart only now creating the second leg to the downside, which starts to be interesting for the short-term possibilities. And the oil approaching the 161.8 correction here. Now we do need to pay attention to that area, because it might be the bounce for new high. But if the commodity creates for us something like a triple cycle later on, and then double wave corrections, that will switch it to the sell for one reason. The daily might be forming a second false break. So yes, it didn't form yet, yes, it didn't complete, and yes, the 4-hour chart does not have any 3 waves down for a momentum, right? But This is a possibility to remember. It could happen and could be a great hint. Meanwhile, the 161.8 expansion of this cycle could use us as the buy setups on the short term. Of course, if we get a good bullish signs and bullish setups with the system you use, then it's definitely considerable. Natural gas, we are waiting for higher highs, trendline breakouts. We don't have any yet, so no trade taken yet there. The German DAX was and remained bearish, as I explained yesterday. That would be pretty much the classical scenario, but as long as the last stop holds, the bearish pressure is on. Nasdaq never got us the trendline breakout yet, and coming close to invalidation. So if it breaks above the invalidation, game over. Bearish plan would be removed as for now, and we would be looking for the next signs. And nothing new from the cryptos. They are kind of without any momentum recently, so nothing new to do there. No trend lines broken, no higher highs on this pullback. Nothing to waste the time on. One pair to pay attention to as well. This is the euro versus the franc. That's the two waves correction we have, and the trend line, right? Once we get the break of the big trend line, we have the good to go for sells. Don't rush. Let it happen first of all. Okay, let the trend line be broken, because without it, look what kind of moves we can be exposed to. Okay, we can still see even 118 if the rally continues and the trend line refuses to be broken. We have no false breaks with lower lows. We have no trend line broken yet. So no rushing into sells here. Let it happen before you consider the sell continuation. And that's basically all. That's our best opportunities. We have the yen pairs been good. The Aussies pairs are back to be interesting tonight. The CAD pairs, like the Kiwi CAD, for example, some of the majors start to be interesting as well. So there are plenty of opportunities. Keep an eye on that, guys, and that will be all. Thank you very much for watching. I wish you a wonderful trading day. Once again, sorry I couldn't make it live, but you know, sometimes technology is a barrier for us. So I'm glad I have the chance to make this video and upload it. I wish you a wonderful weekend to come, and I'll see you in the Telegram groups later. Ciao for now, yours Vladimir.